Name's Robert Sockin is with us, global economist at Citi. Robert, good morning. Good to have you with us here. Thank you very much for your time. I think we're 2 weeks away from U.S. elections, and I don't know how Citi and the team at Citi sort of viewing it. Is the market pricing in a Trump presidency, or do you think it's still too close to call? What's the sense?
Hello, and thank you, as always, for having me. It's really nice to be here. I think the last point you made is exactly the right one. It's still really close to call. We don't have a house view within economics. We're tracking the polls as closely as everyone else, and it still seems to be a very close race. It does seem in some types of polling that Trump maybe have made up some ground over the last several weeks. But if you look at the key swing states, all of those swing states look to be within the margin of error. And so it could be the case that either of them end up winning, because those swing states are the most important to watch. So, the market sentiment, people, when you speak to them in the market, they seem to be feeling more of a Trump victory. But when you look at the polls, it's still an extremely close race.
Oh, yeah, absolutely. And yesterday, Robert, morning, our time morning, I guess it's evening for you. And yesterday it was all about McDonald's, right? I couldn't stop watching those reels on repeat with Mr. Trump there dishing out French fries. So, yeah, it's really happening yeah, as far as the election goes. But from a market perspective, while obviously we're tracking rates and what the Fed is going to do in the economy, but once the results are out, is it going to matter in a material way at all? I mean, it's volatility from here till the result announcement date. What after that?
Yeah, and this is a really key question. And I would make 2 points. One, in terms of the outlook for Federal Reserve policy, the Fed is not going to make assumptions about who is going to win the election. And whenever somebody wins the election, they're not going to make assumptions about certain policies that are going to be passed. Because, candidates can say a lot of things on the campaign trail. It doesn't mean they'll translate into actual policy. So really, the kind of rules of central banking are you take the lay of the land is given once those policies are set and passed, and then you incorporate them into the outlook. So I think that's very important. The second factor is we don't know the exact makeup of policy after that's going to happen after the election under either candidate. It's going to depend, A, on the makeup of Congress, and then B, as mentioned, how what they've said on the campaign trail and in the past translates into policy. So, for example, people are talking about with Trump that certain policies may end up being inflationary, such as he may put on a lot of tariffs, maybe across the board tariffs. This is something we have to monitor closely, but we don't know the extent to which these policies will be implemented, and if they are, when they will ultimately be implemented. So I think there's still a lot of uncertainty about who's going to win and then what that's going to mean on the other end. And we have to see, once somebody wins, what the actual policies they try and put through end up being.
All right. Hi, Robert. Always good to see you, Ben. Robert, what are you factoring in, though? I think earlier when we chatted, you were factoring in 2 more cuts for the remainder of this year. Do you stick to that? And also, what about the Indian markets? We have been thumping the table that, India's giving a good amount of policy outlook. We're giving a good amount of growth as we move to around the $10 trillion mark. But the FI selling continues. And now I think the holding would have come down to around 15 to 16%, which is a multi-year low. How are they positioned with regard to Indian markets? This needs to stop at some point of time. So policy and FI positioning in India. Please go ahead.
Yeah, great set of questions. And first on the Fed, I think the bar for the Fed to do nothing in November is very high. You are seeing some of that percolating around markets, where some people are thinking the Fed could pause soon, given the strong string of data that we've seen. I think given that they started with a 50 basis point cut and that policy rates are still far above neutral, it would be very hard to move from that positioning to a type of a pause in November. So I think they're going to cut 25 basis points in November. Again, the bar to do nothing is very high. And then after that, it's going to depend on how the economy evolves. If the economy continues to look as it has over the last month, which is really feeling a lot like a soft landing with a strong consumer, a stabilizing labor market, then the Fed is going to move at a more gradual pace. My base case would be they would still cut 25 basis points in December, even with that type of outlook, because they're still far above neutral. But then after that, it's going to depend a lot more on how the data evolve, and maybe they move to a much slower pace in 2025 if the data continue to hold up very well. Now, of course, for the Indian markets, we've talked a lot about on the show. India has been one of the best performers in our forecast. We've seen global resilience around the world. I think India is very well positioned to be a strong performer in the global economy. And I do think as global interest rates are going to continue to fall, you're going to see a pickup in global manufacturing activity, something that we really have not seen fully get started in this cycle. You've had some fits and starts, but the manufacturing sector globally has been relatively soft. And as that manufacturing sector picks up globally and global trade picks up, that's going to be another tailwind for India. So I do think long-term, India has a lot of positive forces working in its favor. And I do think as interest rates come down and global trade and global manufacturing improves, that's going to be another important tailwind for the India economy.
Surabhi, on
right.
the point about U.S. interest rates, right? There was the Stanley Druckenmiller interview in which he quoted Jim Grant, who writes the famous rates daily. He said the Fed is actually the forward guidance. He said the bar for the Fed to do nothing in November is going to be very high. He says actually the Fed is not looking at inflation. They're actually working on the basis of their own forward guidance. They're kind of trapped by the forward guidance
Exactly.
because they've told
they've
the market
declared 100 basis points by the end of the year.
we're going to do it. Now they're trapped. Now they, so the
eat your words, so to speak. But Robert, thank you very much for putting it out there. And these are interesting times. Let's see if indeed they deliver that 25 basis points, even though the data may not be pressing them enough to do it. Thank you for joining in today.